the financial system is so upside down and so obvious that it is going to completely collapse and make 2008, 1987, 1929 combined look like a kindergarten party. They're going to kick the financial system over, but they're going to need something to blame it on. They're going to need to have something to say, our policies were working. They were working just fine, except for what? Nuclear war? They're going to have to point at something. And I mean, the most obvious would be World War III. And in order to get to the other side with wealth, you have to be in cash. And truly, cash is gold, because gold is money and nothing else is.
Financial stability risks have increased rapidly due to the resilience challenges faced by the global financial system. Recent turmoil in the banking sector serves as a powerful reminder of the difficulties arising from the interplay between tighter monetary and financial conditions and the accumulation of vulnerabilities since the global financial crisis. Bill Holter suggests that the Western world must implement drastic measures to prevent an impending financial catastrophe, one that would surpass previous economic downturns, including the 2008 financial crisis, the 1987 stock market crash, and the Great Depression of 1929. Holter particularly suggests that Western powers will need to kick the financial system, indicating a comprehensive overhaul or reset of the financial system. However, to justify these actions, they will require a suitable scapegoat or excuse. He speculates that this excuse could manifest as a significant global event like World War III. By attributing the financial reset to the chaos and costs of a world war, they can shift blame away from their policies and actions. Holter also underscores the significance of holding tangible assets, especially precious metals like gold and silver. He argues that silver in particular is an attractive asset due to its favorable price ratio when compared to gold. Silver has gained momentum as the gold-silver ratio retreated towards the 85 level, successfully testing the resistance at $21.20 to $21.50 will pave the way for testing the next resistance level at $22.25 to $22.50. In contrast, Holter views gold primarily as a form of money rather than an investment. In times of economic uncertainty or financial collapse, possessing a store of value like gold or silver becomes essential because they represent genuine money instead of fiat currencies that lack intrinsic value. We will share clips from Bill Holter's interview with Andrew Maguire. But before we proceed, if you'd like more videos like this, please hit the subscribe button and turn on the notification bell for updates. Thank you, and enjoy the video.
Well, first off, from the standpoint of the U.S. or / West bullying, I think that's pretty much over. And I say that's over because the West does not have the ability to bully anyone. I mean, look how the U.S. left Afghanistan. We got our ass kicked, and we left them with $85 billion worth of equipment. The days of you better not do this or you better not do that, or we're going to come in and, blow you up. Those days were gone. You ask about World War III, and I don't think that World War III is going to be started by Russia, China, something outside of the West. Because the financial system is so upside down and so obvious that it is going to completely collapse and make 2008, 1987, 1929 combined look like a kindergarten party. The powers that be, and I've said this for probably 6 or 7 years now, when all is said and done, the West is going to have to kick the financial system. In the U.S., in a barter situation, you would use a pre-1964 dime. There's no way you could buy groceries with gold, because you could never get change back. And the reason I've been so bullish on silver is basically just the ratio. Right now, it's 85, 86 ounces of silver to buy 1 ounce of gold. It comes out of the ground at 10 to 1.
Yeah. That's
God's ratio is 10 to 1. Man's ratio is 85 to 1. One of them is right and one of them is wrong. Silver at this point, I believe silver is the cheapest asset on the planet. And it's not just an asset. It is also, yes, it is an industrial. It's used from an industrial standpoint. You name the uses, whether it be medicinal, solar, technological, et cetera, but it's also money. It's a hybrid. And gold, you mentioned gold as an investment. I don't really view gold as an investment. I view it as money.
Yeah.
Gold it's been the money of kings for, forever. And if you think about, what's the best thing to do if you know you're going into a recession, depression, financial collapse, you want to go to cash. The only problem is cash today, in today's world, cash has been bastardized because it's fiat. It's backed by nothing. It's really not cash. It's a contract. It's a loan to whoever issued that currency. Whereas gold itself is money. So I guess what I'm getting at is if you believe that the system is coming down, or not even just coming down, just say you believe we're going into a bad recession and things will be okay on the other side, you got to get to the other side. And in order to get to the other side with wealth, you have to be in cash. And truly, cash is gold, because gold is money and nothing else is.
The global debt pile increased by some $10 trillion in the first half of 2023, reaching a new all-time high of $307 trillion, a staggering $100 trillion more than a decade ago. Over 80% of this debt surge came from mature markets, with the US, Japan, the UK, and France seeing the most significant increases. As the debt has become the foundation of the global financial system, Holter sees that raising interest rates on massive debt results in substantial debt service requirements. The Federal Reserve raised its key interest rate from near zero to above 5.25% in the past 18 months. Moreover, Holter believes that the problems in the financial system are not accidental, but part of a long-standing plan. The ultimate goal of this plan is to introduce central bank digital currencies globally. This move would grant those in control total surveillance and control over individuals' financial transactions, enabling them to monitor and potentially cut off access to anyone. Holter speculates that the public would eventually be driven to accept central bank digital currencies out of necessity, even though a portion of the population would understand the ulterior motives behind them. Let's get back to the interview.
If you look at what's happened to rates going all the way back to 1982 at the very peak, what would happen is the Fed would lower rates after some type of crisis. And as they lowered rates, then the bubble would begin to expand. And the bubble would expand until the Fed raised rates and something would break. And then, of course, they'd have to lower rates again. So it's been a cycle all the way back to 1982. And interestingly, each peak in yields has been lower than the previous peak until now. So if you look at it on a chart, you can see, on a very long-term chart, I mean, I'm talking, 40, 50 years, rates are turning higher. And the problem is rates are turning higher at a time where debt is so pervasive now. Debt has become the foundation to the global financial system. And raising rates on massive amounts of debt requires debt service. And there's your mathematical problem right there, is that let's look at the U.S., for example. With interest rates going up, we're now at 33 trillion in on-books debt. There's a crap load more of total debt, but just look at the on-books debt. If you take 5% on 33 trillion, you're talking better than 1 trillion. It's a trillion and a half per year in debt service. That does not work. The math does not work with the amount of tax revenue that they're taking in. So the mathematical problem is about to blow up. And this morning, we're at 474. I speculated a year ago that once we got through 3.25, something would break. And sure enough, back in March, April, we had the 4 banks blow up, which, by the way, that's more assets in combined than all of the bank assets from the bank failures back in 2008, 2009. So the problem's already bigger, but they swept it under the rug back in the spring. And here we are now with interest rates, 1.25 points higher. And we've not even talked about, mortgages for homes, mortgages for commercial real estate, et cetera, et cetera. The bottom line is they are in the process of breaking something, and that something is the entire system. And this is absolutely a plan. I believe the whole thing has been a plan since 2007 because the policies they were putting in place back then and ever since then have been too stupid to be any type of mistake at all. So I do believe it is the plan. And I think the ultimate plan is bringing out central bank digital currencies on a global basis. And that, of course, gives whoever's running the show, it gives them total control because they know anything and everything that you do financially, down to a stick of gum. They're going to know you bought it. It also gives them the ability to shut you off. It gives them the ability to shut you and I off because we're not talking the mainstream talking points because we are sandpaper to them, and it's a way for them to snuff us out. And what I'm getting at is they're going to break this thing so bad that the public is going to beg for a central bank digital currency, even though there's going to be, I don't know, maybe 20, 30% of the populations are going to know that what the real goal of central bank digital currency is. But things are going to be so bad just in order to eat. Please give us the central bank digital currency. We have to have some semblance of normalcy. And that, in my view, is the powers that be snapping the trap shut on the populations.
As the global financial system faces increasing challenges to its stability, demanding swift and decisive measures to prevent potential economic crises, the use of tangible assets like gold and silver as stores of value may become more significant, especially in times of economic uncertainty. How do you see the role of tangible assets like gold and silver in safeguarding your financial future? Share your observations in the comments section below. Also, ensure you like this video, subscribe to the channel, and turn on post notifications for more videos like this. Thanks for watching.